So when a company decides to go public and raise hundreds of crores through an initial public offering, there's really one question that matters more than almost anything else to institutional investors and seasoned analysts. And that question is, where exactly is all that money going to go? It's the ultimate multi-billion rupee question, right? Now, you're not going to find the real answer in glossy marketing brochures or those flashy roadshow presentations. No, the truth lives in one of the most heavily scrutinized, legally binding chapters of every draft red herring prospectus. It's a section known as the Objects of the Offer. Welcome back to our DRHP breakdown series. In today's explainer, we are going to decode exactly how Indo-MIM Limited plans to use their IPO proceeds, and we're going to do this by relying exclusively on their officially filed DRHP. We're going to follow the money trail.
Okay, so here's our roadmap for today. We'll establish why this specific chapter matters so much, we'll break down the difference between a fresh issue and an offer for sale, unpack Indo-MIM's exact objectives, explore the concept of general corporate purposes, look at post-IPO monitoring, and finally, leave you with some key takeaways. Let's jump right in.
Section 1. Why Objects of the Offer Matters.
Look, the Securities and Exchange Board of India, SEBI, mandates this specific disclosure for a very good reason. Think about it. When you buy shares in an IPO, you're parting with your hard-earned capital. You need to know if that capital is being deployed to build new state-of-the-art factories, fund crucial research and development, pay down massive corporate debt, or if it's simply providing an exit strategy for early investors. It's absolutely critical to evaluating the investment. Institutional investors literally treat this chapter as the ultimate lie detector test for a management team's priorities. It tells us point blank if the company is looking to the future to drive growth or if they're just trying to clean up the past.
Moving on to Section 2, Fresh Issue versus OFS. This is the absolute fundamental split in capital allocation that you really need to master before reading any prospectus. An IPO is generally made up of two distinct components. First up, you have the fresh issue. And this is exactly what it sounds like. New shares are created, and the capital raised from selling those shares goes directly into the company's bank account. It enters the balance sheet to be used for corporate objectives. The second component is the offer for sale, commonly known in the industry as an OFS. Now, in an OFS, no new shares are created. None. Instead, existing shareholders, like founders, promoters, or maybe early institutional investors, are simply selling their existing shares to the public. And the crucial thing you have to understand here is that the money raised in an OFS goes entirely to those selling shareholders. The company itself, it doesn't receive a single dime from the offer for sale.
Section 3. Unpacking Indo-MIM's objectives. Let's take these theoretical concepts and apply them directly to the real world using Indo-MIM's actual DRHP.
Right, so the main takeaway here is that Indo-MIM is utilizing a dual structure for this IPO. According to the DRHP, they're aiming for a fresh issue aggregating up to 10,000 million rupees. That is essentially 1,000 crores of fresh capital entering the company's balance sheet. But alongside this, they're executing a massive offer for sale of up to 129.6 million equity shares. Now, because the final offer price isn't locked in just yet, the exact total rupee value of the OFS isn't stated. But just based on the sheer volume of shares, we know this is a highly significant liquidity event.
What's really fascinating is looking at exactly who is cashing out in that offer for sale. The DRHP breaks this down very clearly for us. The lion's share is being sold by the corporate promoter selling shareholder, Green Meadows Investments Limited, who are offloading up to 120.5 million shares. We also see individual promoter group selling from Anuradha Koduri and an individual selling shareholder, John Anthony Dexheimer. But check out that fourth entity. The Indian Institute of Technology Madras is listed as an other selling shareholder, offering up to 2.3 million shares. It's a really interesting detail to see a premier academic institution monetizing its equity stake like this. But again, remember our golden rule. None of the capital raised from these roughly 129 million shares is going to Indo-MIM's actual business operations.
So let's pivot back to the capital that is going to the company, that 10,000 million rupee fresh issue. Out of that total, the DRHP clearly states that exactly 7,200 million rupees is earmarked for a single, massive objective. And that objective is the repayment or prepayment, in full or in part, of outstanding company borrowings. Now, this is a vital piece of information for any equity analyst. Why? Because it tells us that 72% of the fresh capital they're raising is not being allocated to building some new state-of-the-art manufacturing plant. It's not being poured directly into immediate R&D for 3D printing. No, the vast bulk of the money is going straight to debt reduction. They are aggressively deleveraging their balance sheet. To truly understand the impact of a move like this, we have to contextualize it against their current financial reality. As per the DRHP, Indo-MIM's total current and non-current borrowings stand at roughly 12,471.95 million rupees. By directing 7,200 million of IPO proceeds to wipe out a portion of this debt, they are effectively erasing well over half of their total corporate borrowings in one massive swing. The DRHP notes that their current ratio of total borrowings to total equity sits at 0.57, so this IPO is going to radically alter their capital structure. It's going to transform them into a significantly lighter, much less debt-burdened enterprise.
Moving to Section 4, General Corporate Purposes.
You might be wondering, if 7,200 million is going to debt repayment out of a 10,000 million fresh issue, what happens to the rest of the cash? Well, this is where the concept of General Corporate Purposes, or GCP, comes into play. You're going to see this in almost every single DRHP you read. It's essentially a flexible pool of capital that SEBI strictly caps at 25% of the gross proceeds. The Indo-MIM DRHP notes this will be used for strategic initiatives, funding growth opportunities, meeting exigencies, which is just a fancy word for unforeseen emergencies, and covering general corporate expenses. It's a legally permitted buffer, and it's vital because it gives management the agility to actually operate the business without having to predict and justify every single minor expense years in advance.
Section 5. Monitoring of IPO proceeds.
A totally natural question arises here. Once the IPO is complete, the bell is rung on the stock exchange, and the company suddenly has all this cash. How do investors know the company won't just take that 7,200 million meant for debt repayment and spend it on, a fleet of corporate jets? The answer is strict regulatory accountability. SEBI mandates the appointment of an independent monitoring agency. As explicitly stated in the Indo-MIM DRHP, they will enter into a monitoring agency agreement. This agency's entire job is to track every single rupee of the gross proceeds and report on its utilization. They ensure that management strictly adheres to the stated objects and they prevent any deviation whatsoever. If the DRHP says it's for debt repayment, it legally has to go to debt repayment.
Furthermore, you have to remember that these IPOs don't happen in a vacuum. Heavy-hitting financial institutions, known as book-running lead managers, help structure the offer. In Indo-MIM's case, we see major players involved like SBI Caps, HDFC Bank, Axis Capital, ICICI Securities, and Kotak Mahindra. These institutions put their own reputations on the line. They conduct extensive due diligence and add serious layers of institutional oversight to ensure the disclosures in the DRHP are accurate and legally sound.
Section 6. Let's talk about how investors should interpret this chapter.
We have all the data, we know the numbers. But how do equity analysts actually use this? Well, professionals use a simple but rigorous checklist. Step 1. Always check the split. How much is fresh issue versus OFS? That instantly tells you who is really benefiting from the IPO. Step 2. Evaluate the specific objectives against the company's broader narrative. If a company claims they are in a phase of aggressive expansion but 100% of the money is paying off old debt, that's a disconnect. That's a point for deeper investigation. Step 3. Compare the objectives with the current financial statements. In Indo-MIM's case, seeing their massive total debt load makes that 7,200 million repayment incredibly logical and financially sound. It makes sense.
Before we wrap up, it is absolutely crucial to dispel some common retail investor misconceptions. First off, bigger IPOs aren't automatically better. It is entirely about how that capital is deployed. Second, an OFS isn't inherently a bad thing. Think about it. Promoters who have spent decades building a successful business deserve some liquidity, and early institutional investors eventually need to exit to return capital to their own LPs. It's a normal part of the corporate life cycle. Third, that general corporate purposes allocation, it's standard corporate practice. It is not some secretive slush fund for the executives. As always in finance, context is everything.
So, we've seen where the money is going, we understand the mechanics, but this leaves us with arguably the most provocative question of all. Erasing 7,200 million rupees in corporate borrowings doesn't just clean up the balance sheet. It completely eliminates the massive recurring interest payments that were attached to that debt. So how exactly will removing those heavy interest costs reshape Indo-MIM's future profitability? What does that do to their bottom line?
And that question is the perfect bridge to our next deep dive. That brings us to the end of today's explainer on the objects of the offer. In the next part of our DRHP breakdown series, we are going to open up the financial engine of Indo-MIM Limited. we'll begin analyzing their actual financial statements, starting with revenue, the profit and loss statement, and key operating metrics. We need to see exactly how strong this underlying business is and find the answer to how a debt-free future might look for them. Until then, keep analyzing, stay focused, and I'll see you in the next explainer.